So have you ever wondered if you've got what it takes to trade for a living? Well, in 2026, prop firms, the companies that fund traders with their own cash, are everywhere. And they're offering what looks like a golden ticket to the trading floor. But with hundreds of them out there, how do you know which one is a real opportunity and which one is just a trap? Today, we're going to cut right through all that noise. We're giving you the ultimate red flag audit to help you navigate this crazy world and find a firm that's actually a partner. All right, let's get into it. This one sentence from an industry report just hits the nail on the head. You see these slick websites, you see promises of huge accounts and massive payouts. They're absolutely everywhere. But as you're about to see, the real story, the one that actually matters, is always buried in the fine print.
Right now, the market is really split down the middle. On one side, you've got what we call high-integrity partners. Their success is literally tied to yours. They genuinely want you to get funded, and they want you to get paid. But then you have the other side, the arcade model. We saw this with firms like FundedTrader before they went bust. These places are set up like a video game, where the house always wins, making their money from a constant churn of people paying evaluation fees. Figuring out which one you're dealing with, well, that's everything.
Okay, so let's zoom out and look at the big picture for a second. How did prop firms get so popular in the first place? And what's the fundamental promise that pulls so many of us in? Let's break it down.
The appeal is obvious, right? Just think about it. You've got this talented trader, she's got a fantastic strategy, but she just doesn't have the capital to really make it work. Before, she was just stuck. But now, prop firms have completely leveled the playing field. If you have a proven edge and you're disciplined, you can get access to some serious capital, and you can do it from anywhere on the planet. It's a story we hear all the time. Prop firms have truly opened up a career path for thousands of people.
And that right there brings us to the million-dollar question, doesn't it? With all these choices, how do you tell the difference? How do you spot the traps hiding behind all the slick marketing? That's exactly what we're here to figure out.
Okay, so before we even get into checklists or anything like that, the most important step you can take is actually a mental one. You have to completely change how you look at this entire process.
I have to be honest. When I first read this quote, it completely flipped a switch in my brain. I used to think of these evaluations as just a challenge, try to get a high score. But this reframes the whole thing. An evaluation isn't a game. It's a job interview. They are not looking for someone who just gets lucky. They are hiring a professional to manage their money.
And that key term right there is capital steward. Think of it like this. If you were managing someone's retirement fund, they wouldn't just want you to chase huge returns, right? No, they'd want to know first and foremost that you're not going to lose their life savings. That's exactly what prop firms are looking for. Your number one job isn't to make a killing. It's to protect their capital.
And this just drives the point home perfectly. You could have a trader with a 90% win rate who risks, say, 5% of the account on every single trade. To a firm, that person is a massive liability just waiting to blow up. They would much rather fund a trader with a 55% win rate who shows them flawless risk management. It is all about preserving that capital.
So please remember this. Success in this world comes from a professional, repeatable process. It's about having a solid plan and treating the evaluation like your first month at a new high-stakes job. It really is logistics, not luck. And having this professional mindset, that's the foundation for vetting any firm the right way. All right, now that we've got the professional mindset locked in, let's start building our toolkit. It's time to run a proper audit before you even think about spending a single dollar.
Let's get down to the brass tacks here. What are the specific, non-negotiable things you absolutely need to verify to protect yourself?
Here it is. This is your audit checklist. First up, legal identity. You have to know you're dealing with a real company, not some fly-by-night operation. Second, payout credibility. Honestly, if they can't prove they actually pay people consistently, what's the point? This is maybe the most important one. Third, rulebook clarity. If the rules are confusing, chances are they're confusing on purpose. Fourth, data integrity. Their platform has to be stable, period. And finally, reputation. A solid reputation built over years, not just a few weeks of hype, that's a huge indicator of a trustworthy partner. And let me show you one of the biggest, reddest flags you can possibly find, changing the rules. So back in late 2025, this firm, FundedTrader, became infamous because they changed profit splits and trading rules on traders who had already passed their challenges. Think about that. That is a catastrophic breach of trust. If a firm is constantly messing with its core rules, it's not a stable partner. It's a massive red flag.
All right, now let's get even more granular. We're going to zoom in on what is, without a doubt, the single most important part of any prop firm's rulebook.
Okay, pay close attention because this slide is critical. Not all drawdown rules are created equal, not even close. Let's use an example. Imagine you're in a winning trade and you're up $1,000 in unrealized profit. With an intraday trailing drawdown, your stop-out level actually moves up with that floating profit. So if the trade pulls back on you, you could get stopped out even if the trade is still positive. With a static drawdown, your limit is fixed, which gives you more breathing room. But with an end-of-day model, your stop-out level only adjusts at the close of the trading day, giving you the most flexibility to manage your trades.
So why does this one little rule matter so much? Well, because the data is crystal clear. Analysis shows that traders have up to an 83% higher success rate with firms that use those more friendly end-of-day drawdown models. Think about that. This one rule can literally be the difference between passing and failing. It's huge.
And it's not just about drawdown. You gotta watch out for these other potential deal breakers. Consistency rules, oh man, they can be a real killer. They can actually punish you for having one really big winning day. News trading restrictions can obviously be a major problem if your strategy depends on those big market events. And look, if you're a swing trader, you absolutely have to make sure the firm's policies let you hold trades over the weekend. It's non-negotiable.
So we've shifted our mindset and we've decoded the fine print. The final step is putting it all together to make a smart, strategic choice that's actually right for you.
And here's the final truth you really need to understand. There's no such thing as the single best prop firm. It's a total myth. The goal isn't to find the highest rated firm online. The goal is to find the one that's the best match for your unique way of trading. The right partner is the one whose rules don't break your strategy.
So here's an actionable game plan you can use today. Number 1, define your rule friction. If you're a swing trader, you have to find a firm that allows weekend holds. Simple as that. 2, price your runway. Don't just look at the first fee, think about the cost of maybe having to retry. 3, model your scale path. Some firms have really slow scaling plans, so make sure you're okay with their timeline. And 4, stress test payouts. Do your research. Some firms have a bad reputation for delaying payouts, so you need to know that risk going in.
And hey, one last pro tip, and this is purely to protect yourself. Before you pay for anything, take a timestamp screenshot of the rulebook and the terms and conditions. If there's ever a dispute down the line over a rule change, that screenshot could be the most valuable asset you have.
So we'll leave you with this one question to think about. You could have the absolute best trading strategy in the world, but it means nothing if it's incompatible with the rulebook you're forced to trade under. Choosing the right partner isn't just some administrative step, it is a core part of your trading edge.